Hi guys, welcome back to the Clever Money Dad, and today's video is all about one of the most powerful concepts in investing and building wealth, and that's the compound effect. While it might sound like a boring maths formula you zoned out on in school, compounding is an incredible force that has helped everyday people here in the UK build massive fortunes over time. In fact, once you truly understand how compounding works, it could completely transform your mindset around money and investing forever. So what is the compound effect? Put simply, it refers to the ability of an asset to generate exponential returns over time. Small, consistent gains are automatically reinvested to produce earnings from those previous earnings. It's like a financial snowball that gains more and more traction as it rolls down the hill. And here's the best part. Compound growth happens automatically if you invest in the right investments. You just need to take advantage of it. So to illustrate how powerful compounding can be, let's take a look at a simple example. Let's say you start investing £4,000 at age 25 into a stocks and shares ISA and then contribute nothing else after that initial lump sum. That £4,000 may grow at 7% per year, which I think is a reasonable expected return for a portfolio. After 10 years, that initial £4,000 investment would be worth around £7,600. Not bad, as it's nearly doubled in a decade. But see what happens if you simply leave that investment alone for a few more decades. After 20 years, that would be worth £14,500. After 30 years, £27,800. And after 40 years, £53,000. So here's the real eye-opener. By age 65, that simple £4,000 investment made at the age of 25 will have grown to over £101,000, all through the magic of compounding. That's a 25 times return over 40 years. And if you consistently contribute more over time, even just small amounts, the growth becomes exponentially larger. As you can see, the compound growth is a phenomenal way for people to build serious wealth gradually over the long run from a relatively small start. It's like getting incredibly rich in slow motion by being patient and consistent. There are three key factors that impact the power of compounding: the rate of return, the time period, and the timing of investments. So first, the rate of annual growth is critical. The higher the rate of return, the faster the compounding snowball accumulates mass and momentum. And that's why it's so important to invest in growth assets like stocks instead of relying on low interest from bank savings accounts. Next is the time horizon or duration that compounding has a chance to work its magic. The longer your investments can grow undisturbed, the bigger the exponential gains. That's why it's ideal to start investing as early as possible, even with a small amounts like £50 or £100 per month. More time equals more compounding. Finally, the frequency and consistency of additional investments plays a huge role as well. The sooner and more regularly that you can top up your investments, the faster your assets grow from earning interest on interest. So why is the compound effect worth paying such close attention to as an investor? So there are several compelling reasons for that. So first of all, it's an automatic wealth builder. Once you set up the right investment accounts like an ISA or a SIP, compounding happens naturally in the background without extra work over time. Secondly, it's accessible to everyone in the UK. You don't need a huge amount of upfront capital or to take big risks. Through small monthly contributions and patience, regular people can build substantial wealth over time. Third, it rewards discipline and long-term thinking. In an era obsessed with getting rich quickly, compounding is the ultimate counterbalance that reinforces patience, delayed gratification, and sticking to the plan. And finally, it makes incredible growth possible from modest beginnings. Compounding can turn a relatively small amount of invested money into a surprisingly large nest egg over multiple decades. It's exponential growth you cannot achieve through other methods. Mastering this concept and utilizing it through accounts like ISAs and pensions from an early age can be completely life-changing for your future financial success. So hopefully this quick video has hammered home just how potent compounding can be if you have the right mindset, strategy, and patience to let it work for you over decades. Getting started investing early, making regular contributions, and giving compounding enough runway. Investing early, making regular contributions, and giving compounding enough time can be a game-changing wealth move. So even if you're starting small, just start. Your future wealthy self will absolutely thank you. So thanks for watching this short video on the compounding effect. I'd love it if you were to subscribe to my channel, check out some of my other videos, leave a comment below. I'll certainly get back to you. So thanks again for watching, and until next time, bye bye.